We continue to see more and more risks on the horizon for Toronto's new construction condo market. That's what I'm going to be unpacking today. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. If you'd like to meet with me and my team, you can just click the link in the show notes below or send me an email at askjohn@movesmartly.com. So today we're going to unpack some of the challenges that we're seeing on the ground in the new construction housing market, and specifically not new construction sales, but condos that are under construction and scheduled for completion. There's a recent Globe and Mail article, I'll include the link in the show notes, talking about how unsold units are piling up in a lot of these buildings. And a lot of this is because once these units are scheduled for completion, you have buyers basically saying, I can't close. Keep my deposit, sue me. I'm not taking possession. I'm basically defaulting on the condominium. Why is this happening? I mean, it's happening for a number of reasons. I mean, in some cases, the buyers just can't get a mortgage, they can't qualify. But the bigger issue is that by the time these units have completed or are completing, they're actually not worth what the investors paid for them, 4 or 5 years ago when they bought them pre-construction. So why are they not worth what they paid for them? We have to understand how the dynamics of Toronto's condo market work and kind of how we got to this point. So in the Toronto area, pre-construction condominiums generally sell for 30 to 40% more than resale than existing condos. And the reason for that, I mean, there's probably a lot of reasons. I mean, builders will tell you construction costs surge, but part of that is that they just basically charge a premium because there are tons of investors who wanted to buy pre-construction condos 4 or 5 years ago, and were willing to pay that premium for a number of reasons. Number one, because they didn't actually have 20% to actually buy an existing resale condo, which was actually less expensive. But on top of that, it was framed by real estate agents as basically an easy way to make money. You just put down a deposit, you can stagger it over 2 or 3 years. And once it's done, you don't even have to take possession. You can just flip it and you'll make 200 grand from doing nothing. And this is really how pre-construction condos were pitched. Not all agents, there are some very decent agents who obviously are very cautious when their clients are buying pre-con, but a lot of our industry is fueled by nonsense, quite frankly, just complete stupidity, pumping people into condos that made no sense. So when you look, maybe 4 years ago, a lot of investors were paying, 15, 16, 17, even $1,800 a square foot for units, when at the time resale units were only selling for 1,000 or 1,100 or 1,200, depending on the comparable building. So they're paying massive premiums. And again, all of this was rooted in the expectation that prices would just keep going up because for decades, prices had keep going up. So it seemed like a logical expectation. Fast forward 4 years, prices have actually been pretty flat in Toronto's condo market over the past 4 years. Again, they spiked during COVID, then they crashed, but overall, we're not really that much further ahead than we were 4 years ago. So what's happening today is many of these condos are completing and they're not worth what the investor paid. I did a video a little while ago on how banks and our bank regulators are effectively bailing out some of these investors, because what's happening is, and this is a project downtown, many of these investors bought units for $1,500 a square foot. In today's market, those units are only worth $1,200 or $1,250. When that happens, typically the banks require the investor to come up with more cash because the 20% that they put down as their deposit has disappeared because it is sort of lost in the decline in value, right? So typically what you need to do, if you paid 1,500 and it's only worth 1,250, well, and that deposit's gone, you now need to come up with an additional 20% on the new appraised value of the unit. And many banks were basically turning a blind eye and saying, well, we're just going to pretend it's worth what you paid for it. We'll give you a mortgage anyways, effectively giving them zero down payment mortgages or 100% loan to value. Now, the projects that they're doing this, what they call these blanket appraisals with, the difference between what investors bought and what the units were actually worth, were maybe between 10 to 20% difference. They're willing to turn a blind eye. As we're moving forward over the next year or so, the difference between the appraised value, the actual value, and the value that investors paid is actually widening. And I was speaking at a conference recently, and Daniel Foch was there. For those of you who don't know him, he's obviously very active on Instagram. He's very active on Twitter. Has a great investment podcast, and he was talking about how there's one project downtown. I think he said the difference between what investors paid and what it's worth. I think the pre-construction price was on average 1,800 a square foot, and today's value is something like 1,100 a square foot, which is just mind blowing. He wouldn't tell us what project it was, but I think it's somewhere downtown. Anyhow, so obviously, as this difference widens, you have a lot of issues, and you have investors who cannot close because they can't get a mortgage and because the unit isn't remotely close to what they paid for them. So as we're moving forward, we're seeing more and more of these investors effectively back out of the deal. Again, many of them just didn't have the means to close when they initially bought their units. Now they can't close, obviously, because they can't get a mortgage. Underwriting's a little bit tighter, interest rates are higher, plus the unit has declined or isn't worth what they paid. So what might happen from here? I mean, again, it's very tough to say, but it's very possible as we move forward, we'll see more and more of these investors defaulting. The banks will bail out some of these projects and some of these investors to a point, but they're not going to pretend a unit that has declined 40 to 50% in value or is like that much of a delta between what was paid and what it's actually worth in the market value. They're not going to probably be that aggressive in doing blanket appraisals. So you could have more and more investors defaulting. You could have some projects failing. At the end of the day, if too many investors default and there are not enough people ready to take possession of these units to close, the condominium corporation cannot form. The project basically fails, and probably what will happen is some vulture investors will come by and pick up the units and scoop them up. But at the end of the day, the issue is we have a lot of inventory in the pipeline that was built and sold at prices that don't reflect today's market conditions, and what those risks and how they might play out in the market. I think it's too early to tell, but I think it's one thing that obviously we need to keep an eye on. And it reminds me, I think this was probably at the start of COVID. I was speaking at a small conference by like policymakers and people in the building industry and people in the banking industry and that kind of pool of people. And we were talking, and I think it was actually real at the start of COVID, and they were talking about kind of risks to keep in mind and be aware of as we move through COVID into the market. And of course, the risk that I mentioned is precisely this one. I mean, at the time, I said, listen, this is a material risk. I mean, especially I think this happened before the market started taking off, where we were concerned that, prices would remain flat, might even dip a bit. And I said, well, if that happens, there is this, of course, massive risk that if condos are not worth what people paid for them, we could have people struggling to close on them. And it was really interesting experience because, you had to have a lot of people basically telling me that this isn't a risk because they keep hearing there's a lack of supply and how could this be a problem when we're underbuilding and we have a supply shortage and, and then one person like a PhD economist basically said, I told my employer that, there's risks in the condo market 5 years ago. I was wrong. I'm never making that mistake again. It's just fascinating to kind of hear these comments because I wasn't a Chicken Little pretending this is going to happen. I mean, I just raised this as a risk, and in some ways, I think I even called it a tail risk, which is largely a lower probability event, but that can have potentially an outsized impact. So it's not about predicting where the future is going to be. It's just thinking about potential scenarios. And it was fascinating because, again, like I have half of these people looking at me and talking to me like I'm an idiot. And I'm listening to their questions thinking, God, you guys are like not particularly critical thinkers because it's not about what will happen and what is happening and the fact that this risk is unfolding. Like at the end of the day, it's when you hear people who are effectively just parroting what they hear in the news, that we have a supply problem and prices can only go up and we can't have this risk. I mean, they actually sound no more intelligent than many of the pre-construction condo and realtors who are pumping pre-construction condos and telling their clients you have to buy because prices will keep going up. This is like how considered their arguments were in this space that is supposed to be the sharpest thinkers in Canada. And again, they saw zero risk that what we're seeing today, is going to happen. And again, it wasn't about a prediction. I didn't predict anything. You can't predict these things. I mean, it just happens to materialize that we've had 4 years of no growth in the condo market and resale prices. So we're seeing new condominiums completing at prices that are significantly above market values. And that is a risk, of course. And I think it's a risk that we're going to have to see how it plays out in our economy, in our condo market. Again, and some of the concerns how does this impact resale condo prices? And does it have a spill off to low rise prices? And my instinct is, if we see more pressure because of this in the new construction condo market, will it spill off to low rise? I mean, my instinct is no, because they're not substitutes. A lot of the new housing that's being built are tiny condominiums, which are not a substitute for a low rise single family home. Having said that, if we see pressure in the condo market, projects fail, they don't close, sentiment can also play a very big role. So even though they're not substitutes, once you have an environment where people are worried, and if that does happen, and I think banks and policymakers are doing everything possible to not have projects fail and to not have panic and defaults and all of these things. But if it does happen, yeah, that can spill over if the sentiment spills over into low rise. So very tough to predict what's going to happen, but I think anyone who's serious about housing or is thinking about housing is all of a sudden worried about these risks when, everyone with a PhD 4 years ago thought we were all crazy for being concerned about this because we had a lack of supply, and you can't really have prices fall when you have a lack of supply, according to the experts at that time. But anyhow, we're seeing that this is a risk. We're seeing condos already with 7 months of inventory in the resale market, plus these risks in the new construction market coming ahead of us. So we'll have to see how all of this plays out. Again, I can't make predictions. Even at that time, I wasn't making a prediction. We're just thinking about potential outcomes for the economy, for the housing market, risks that are low probability, but have, a high impact, which this one does, or potential consequences. So anyhow, going forward, obviously, this is one of the things we're going to be keeping an eye on. If you have any questions about this, please post them in the comments below or shoot me an email at askjohn@movesmartly.com.